Good afternoon, everyone. Good evening. Maneco 64 here. I decided to do a live stream tonight. Uh, I did say that a few days ago I'm going to dedicate a lot more time to the channel. So I might be doing quite a few of these during the week. I'll still be doing my Sunday live stream. Nice to see people coming on to the live stream. The title is about bonds, whether it's safe to invest in bonds. I want to say first that I'm not advising people to buy bonds. I'm not a qualified financial advisor. I did work in the city, of course. At the time, I did have all the regulatory how can I say, licenses, but I'm out of the city. I'm not advising private clients, but I just want to talk about what to look at in bonds, all the different kinds of bonds, which ones I think are the safest, the riskiest. Also, the time of the bonds, the maturity is important. You need to look at the company or the government. Of course, there's all kinds of bonds, municipal bonds, mortgage bonds. Yeah, you need to do your homework. That's the thing about bonds. They're very complex. There are loads of different bonds. So I saw MM Knows here. Hi, MM No. Yak Maneco from Bulgaria. Farid Asak. Hi, Farid. John the Glass. Gary D. Vajra. Joshua Porter. Finally, I catch Mario live. Yeah, as I said, I'm going to be doing more of these, hopefully. MK Ultra from Seattle. The yield curve. DMC, it looks like the answer to your previous questions is that it's another buy the dip. Yeah, it has looked. It's amazing how the market, stock market has gone up so much in the last 3 days. There seems to be no profit taking, it just keeps going up. It fluctuates a little bit during the day. William Barnes, you're welcome. Looter, better negative interest rates than default. Yeah, so the reason why I'm doing this is because, yeah, I'm not changing my view that precious metals are safe. You need to have stack gold and silver. Of course, that as well is not advice. It's what I do, but sometimes you need to diversify a little bit, I think, and especially if your precious metals investments do well, you might want to take a portion of it, 10, 20%. It depends on the individual, and maybe look at some bonds. And today I was looking at a website in the UK. It's one of the biggest brokers here, Hargreaves and Lansdowne, and they trade bonds, or they have access to the bond market. And I was looking at some of the bonds that they have, and there are some that were quite interesting. And one thing I would say personally, if I were to put some money in bonds, it would be more in shorter term bonds, like 1 year or 2 year, maybe 3. And yeah, bonds that don't have a very long-term maturity. And why is that? Well, because the longer term it is, the riskier it is. You get the inflation risk, you get the credit risk, company might go bust, and you get your principal is at risk in terms of the fluctuation of the capital. Let's say you buy a 10-year bond, you put X amount in, and then interest rates start rising. The price of that bond is going to drop quite a bit, and if you need to liquidate that urgently, you're going to have lost a lot of your principal. While in a 1 year or 2 year bond, that doesn't move as much because there isn't that much time. So interest rates don't affect the price as much. And the other thing as well, you can find some interesting bonds that have been running for 20 years or 18 years, for example, and they come near the end of the 20-year term. And sometimes they give you an interesting yield. So that's the other thing I would say. So Vajra, thank you for the super chat donation. How do you feel about miners? Do you speculate with them at all? Right now, I haven't. But yeah, they're very speculative. And I don't think there's too many bonds for the miners, of course. One thing I would say for the miners is there's different kind of mining companies as well. There's the junior miners that are exploring. They haven't found the gold. It's very speculative. There's the ones that are producing, and they're smaller companies. And then there's the big ones like Newmont and Barrick. They're just like they're safer in terms that you will get the move in their stock price if the gold price moves up. You won't get as much upside on them. Then there are the royalty companies as well, which are interesting. Royalty companies, they're not involved in the mining, but they invest in companies that are, and they get a royalty from the precious metals that they mine. I recommend you go on to, if you want to look at different mining stocks, go into the prospectus of the mining funds like Sprott or the Tocqueville. That's what I used to do. Farid, yeah, I'm doing an interview next, I think it's Tuesday with ITM Trading, Lynette Zhang. I think it's going to be at 5 p.m. my time. So that's midday Eastern time. And I think it's 10 a.m. her time. She's mountain time. I think she's in Arizona. Yeah, I'm looking forward to that. Calvin Cooper from Atlanta, Georgia. Nice to see you here, Calvin. Negative yield bonds. I don't, if you want to speculate or trade, yes, you do that. But I'm looking more at income. For example, I found a bond here looking at the broker page in the UK. It is Barclays Bank. It is a bank, but we need to keep an open mind sometimes. So let me go through it. I'll tell you a little bit about it. And I thought it was quite interesting. I'm just opening up the page for it. Okay, so it's a Barclays Bank, and it's a subordinated note. So you need to look at all these things. Read about the bond, and don't just say, oh, it's a bond, I'm going to buy it. So what does subordinated mean? It means that it's last in line of the creditors. So if the company goes bust, you probably won't get much. Of course, it's still ahead of people who own equity or stock. So, for example, this bond was issued in 2009, and it matures. Redemption date, it's called the redemption date, is May 2021. So it's almost like buying, putting your money on deposit for a year, just over a year. The coupon is 10%. But the yield is 9%. So here you can buy this subordinated note on a too big to fail bank and earn 9% over like 14 months. This is in sterling, of course. I'm sure there are deals like that in the US as well. I just thought it was interesting that you could get 9% for this subordinated note from Barclays Bank. So that's quite interesting. The other thing you need to do, of course, is check how much the broker is going to charge you in fees. Sometimes they charge annual fees. How much the price is going to be when you buy, so that you get the right yield. It's very important. Yeah, Graham. Yeah, the country might go bust and the company might go bust. I agree. And as I said in the beginning of the video, I'm not changing my mind about precious metals. I'm just talking about bonds because sometimes people in this space, the gold bugs, silver bugs, and crypto people might do really well with a crypto and make big capital gains. They might want to take a part of that to have some income. So, and as I've said earlier, can you guys hear me? Yeah, good. As I said earlier, I would focus more on very short-term bonds, as this Barclays one. As you saw there, it's only over a year. Yes, Barclays could go bust in a year's time, and you need to look at all of those things. The credit rating is very important as well. You want to make sure that you want to look whether that it's an investment grade bond or below investment grade, which is junk. There's all different things. Thoughts on uranium? Not at the moment. Years ago, I did buy a uranium stock. I think it was Chemico, but I haven't really looked into uranium lately. Low blood pressure. I put my life savings in the 100-year Argentina bonds. Well, that's one thing I wouldn't do. I think it's just, of course, that the other thing about bonds, of course, companies borrow money. They issue the bond in the primary market, and then the bonds will trade in the secondary market. Of course, you can buy that bond, the 100-year bond. Doesn't mean you have to hold it for 100 years. Yes, the yield will be fairly high, but I think you can find more interesting bonds, safer bonds, looking at corporate bonds, maybe mortgage-backed securities, and shorter term. There's less risk shorter term. Design digital architecture. He liked the last interview. Yeah, that was a good interview. That guy, Dan Oliver, knows his stuff. Hopefully I'll do some more interviews with him. No, Pablo, it's not Sunday. It's just, I've said a few days ago, I don't know if some of you might have heard me in my video, I'm going to spend a lot more time now on the channel. So I've got more time to do live streams like this, impromptu. I will still keep doing the Sunday live stream. Yeah, that's right, MM. No, give you high blood pressure. Yeah, so one of the things about bonds, for example, you've got all the, so we've got government bonds, which are supposedly the safest. So US Treasuries, gilts, and out of all the major bond markets, believe it or not, I think the US Treasury market is the most attractive, because all the other ones have very, very low yields. Like the 10-year gilt is less than 0.6%. In the US, you get over 1.6. I know it isn't great. So you've got government bonds, and then you get also municipal bonds. Those are interesting as well. Not as safe, of course, municipal bonds. But if you can find a bond that's been around for 10 years, but is maturing in 6 months or a year, and the yield is quite good, you might want to look at that. Yes, risky, but you only got 6 months or a year left, and the yield might be interesting. And I think a lot of the municipal bonds in the US are tax exempt. So I think that's very interesting as well. Then you get the mortgage-backed securities as well. That's tricky. I don't really follow that sector that much. And then the corporate bonds. There are all kinds of corporate bonds, of course. And yeah, the other thing about bonds, I've got here this grid from a bond market workshop, February 1990. So I went to this bond workshop, you can see here, in 1990, so 30 years ago. So what's this grid? Well, it's semi-annual to annual. So that's the other thing as well. Bonds, for example, they can pay their coupon on an annual basis. That means the coupon will be paid once a year, or they can pay it semi-annually. Some of them pay quarterly. I would prefer the semi-annual, so you get the income twice a year. And this grid, all it does here is because a semi-annual yield of 2% corresponds to an annual yield of 2.01%. Why is that? Well, because if you get a coupon payment in a semi-annual bond, you can reinvest that theoretically back into that bond. So your yield will be higher after 12 months. So you can see here the grid. So 4% on a semi-annual is 404 on an annual, as you can see. So you got all these different things about bonds. That's why it's so important to read about the bonds, to do your homework. And then you got here also annual to semi-annual, the other way around. And on the other side, because treasury bonds, for example, in the US, are traded in 30 seconds. So if you call a treasury broker and you're asking for a price, and they'll say, oh, it's 102 and 830 seconds. So here in the back, I've got how much 830 seconds is. So let's, well, this is in 16ths and 30 seconds. So it's not decimalized. So there you go. All different kind of things. And here as well, the other thing about bonds that is really important, basis point yield values of 1 point or 1% in the price of par bonds. So the longer term the maturity of the bond is, the more, how can I say, sensitive to price movements the bond price will be. If, let's say, in a 1-year bond or a 2-year bond, if interest rates drop by 1%, the price won't go up as much as on a 10 or 20 or 30-year bond. So that's what you need to keep in mind. So this was Your Market Trading Consultants from back in 1990. They had telephone and fax, so they didn't have email or websites back then. SAC Media, yeah, I did give about 20 minutes notice. As I've said, I'm spending more time on the channel. I just, earlier today, I was looking at some bonds. I was thinking maybe put a little bit of money into bonds to get a extra income. And there are interesting things, bonds, if you look at them. Of course, they're risky. I'm not getting out of my precious metals, but sometimes it's good to diversify and to get an income in this age of very low income. There are interesting bonds. If you look carefully, you can get some interesting bonds that are paying a decent yield. Of course, they're going to be not as highly rated as the AAAs, but if they only have like a year or 18 months or 2 years to go, it could be something to think about. And again, I'm not advising anyone. I'm just telling you what I'd look at in bonds. Jeff Brown is going to bed. YouTube moderator has been notified about your copyright infringement. We have to deactivate your channel. What's that, No and Lord Humongous? You know, is this guy a troll or this YouTube moderator? What copyright infringement are you talking about? Yeah, Lord Humongous, I think, is a troll. I haven't gone. It must be a false flag. Yeah. So anyway, does England let foreigners purchase land? Yeah. Yeah. Anyone can buy if you have the cash. You can come here and buy things. It's not like some other countries like Switzerland. There are some controls, even though they changed that. But 20, 30 years ago, for example, if you're a foreigner in Switzerland, you could only buy property a certain amount of square foot. So the markets were, I guess gold and silver did pretty well today. Gold is right now at 1567 and silver outperformed as well. Stock market, of course, has gone up again. The other interesting, because bonds are part of fixed income securities. So there are other securities that are, for example, not bonds. For example, preference shares. They're like not real. They're riskier than not as risky as equity, but they're in between equity and bonds, fixed income, and they provide an income as well. Preference shares or preference stocks. They could be interesting as well. Usually they provide a fairly good yield. Lord Humongous, next Tuesday at 12 midday Eastern time, I'll be on with Lynette. Coffee with Lynette. It's 10 o'clock her time. She's in Arizona. Yeah, I'm looking forward to that. I was supposed to have done an interview with her last year, but something happened and it fell through. And I was contacted again by Megan a few weeks ago. Not many people. I guess I don't usually do a live stream on a Thursday. We've only got 71 on. I'll take other questions as well. We don't just have to talk about bonds unless you guys want to ask a question about it. Let me know. So tomorrow we've got non-farm payroll. What do I think about non-farm payroll, the U.S. job data? Well, it's a survey, actually, the non-farm payroll. So they don't go out there and check with the biggest employers in the U.S. how many people they're hiring. They just do a survey with a number of people and they extrapolate. So it's not really exact. There used to be a guy from Trim Tabs that used to keep track of tax revenue at the U.S. Treasury, like, and he thought that was a better way to see how the labor market was doing, but it will probably affect the market a little bit tomorrow. It's the big number. Parbar says, I love the monetary history videos. Please continue. Yeah, I did one. It took a lot of time to prepare for that. And I thought it was a pretty good one. Didn't get as many views. I don't know what's going on. Sometimes I don't get as many views. I did Bretton Woods. From Bretton Woods 15, 1971. The next one will probably be from August 15, 1971 to until Paul Volcker, so to speak. And I'll talk about how the stagflation took place in the 70s and how Paul Volcker was able to end the stagflation. Yeah, and that will be the second part. I do have Bitcoin. Yeah, I do. Bitcoin, I have some EOS and some a bit of Monero. I've got Steam. Been doing putting my videos on Steam it since August 2016. So I've got a bit of Steam. Made quite a bit in the past that I've already cashed in and spent. So Steam, it has been a good source of income, even though right now my income on Steam has gone down. I still have quite a few Steam tokens. Yeah, I'm holding on to the Bitcoin, that I have, and also EOS. I have a little bit of Monero. I think cryptocurrencies is up to the individual to do their homework and decide which coins. There's so many altcoins out there. Rumpelstiltskin, your last video really great. They're all great. Oh, thank you, Rumpelstiltskin. 7 a.m. in Tokyo. Mushi, Rumpelstiltskin. Rumpelstiltskin sun. Baltic Index has been crashing down since January 2019. Yeah, I spoke about that. I think it was yesterday's video or the day before. It's at like 40-year lows almost. It's amazing. I saw that German industrial production or manufacturing data today were really weak as well. Mario, when do you think we will notice the peak effects from the coronavirus economically? I'm not really enough of an expert. I'm not an expert at all in terms of these viruses. But from what I've listened to Chris Martenson of Peak Prosperity, if it keeps going the way it's going, it could, in a month or two, things could get really bad. So if it's a really bad virus, and I know people say, oh, it's engineered, and that could be right, but we're just looking at the facts. If it gets really bad, as Chris Martenson is talking about, I think within 12 months, we could see really bad. It could affect the economy really badly, even 6 months. Joshua Porter, is there really only one corporation that controls everything? I don't think it's one. I think years ago, there's a Swiss research institute. They looked at all the biggest corporations in the world, and they found that a lot of them are interconnected. So you might have like a dozen or 30 that own loads of other ones. Yeah, but I don't think it's one. Yeah, Billy is sleepy. Yeah, Grow Mechanic, I saw that in Lebanon. They are, getting rid of their fiat and buying anything that they think has value. Max Garza said silver was going to outperform Bitcoin. He had David Morgan on. Yeah, silver has been very frustrating. I have quite a bit of silver, but it's like I've put it in the drawer, so to speak, and I leave it there. I won't touch it. Hopefully it will pay off one day. It's just been a lot of false starts lately in silver. Yeah, Billy's silver blanket. Actually, my wife bought that for her, but he likes it, so he uses it as well. 75 people. It's all right. I mean, it's not as much as during on the Sunday. And I guess people are probably still, some people are at work in the States. It's 5 p.m. only. So, and maybe in the UK, people are going to bed already. It's 10 o'clock, maybe not. So what else about bonds? Yeah, I've got a book here. If any of you are interested in looking at bonds, do your homework. I mean, I've been at this for over 30 years, so, and even then I have to be careful. It's the handbook of fixed income securities. They call it like the Bible of fixed income securities. Not so much gold, because I think gold is acting a lot like a monetary metal or commodity. But I think, if we get the hyperinflation, yeah, you won't be able to get any of these commodities. They will be priceless. MMNO thinks the big shorts on COMEX triggered the the move down in precious metals. I think it was yeah, I mean it was on Monday, of course, that we saw. I think we went to overnight. I think we were at 1594, and those first 2 days of the week they really crushed it. And I think there was probably a little bit of intervention because they wanted to calm people down about this coronavirus. The Chinese helped as well. They pumped in a lot of liquidity into the system. Graham Hobbs, who do you see holding cash with the threat of hyperinflation? Well, people like you and I and people who follow me, hopefully they won't hold any cash. It will be probably pensioners who have no idea what's going on, and they think that it's still okay to leave their money, 20, 10, 30, sometimes more, 1,000 in the bank. If there is hyperinflation, that cash in the bank will be worthless, unfortunately. And that's why I know bonds are cash, and I'm talking about bonds. That's why I'm saying that I wouldn't do any bonds personally more than 1 or 2 years. The hyperinflation, of course, can happen overnight, but if you put 10% of your money in, and there is a hyperinflation, but you've got precious metals, that 10%, yeah, you'll lose quite a bit of that purchasing power, but it will more than make up in the gain in the precious metals. No, Nicholas Amato, I don't think the UK has enough gold at all. UK government treasury has 310 tons, I think, or 300 tons. Most of like Italy, France, Germany, they have over 2,000 tons. US has 8,000. Even the Chinese have more. So no, the UK does not have enough gold. One thing that the UK has going for it is that the Bank of England holds 5,000 tons for other people. And we know that possession is 90% of the law, and we are an island, right? So maybe that's why the UK government doesn't worry too much about having gold, because they know that they have other people's gold here. And if there is a crisis, uh, it's going to be very difficult for countries like Australia that have their gold here to get it. No, David, I don't think Christine Lagarde will do a better job than Mario Draghi, even though Mario Draghi, personally, I don't think he did a great job. He did a good job for the bankers. She's not going to do a good job for the general public, nor did Mario Draghi. Hecla Mining, a nice move today. I haven't looked at Hecla Mining today. Did you read about JP Morgan spoofing? No, I haven't. I haven't read about that. Hecla 10% up. I think they have some results now. I think I saw a headline. Rocksteady is Rocksteady asking a question. Let's see. If Fed go wild with more money printing, how long do you think the rest of the world will keep accepting their dollars? Yeah, that is a good question. Actually, I've been thinking of doing a video about this. So basically, I saw that the UK, the ECB, Japan, and some other countries that are part of the BIS, and the US is part of it. The Fed is, the US is not involved. Those countries are working to try to diversify, to get their own digital form of currencies to try to diversify away from the dollar. So I think they are already. We saw Mark Carney, governor of the Bank of England, at Jackson Hole last year, say that the world is going to diversify away from the dollar, that it's inevitable. So I think it's already happening. And that's why I think the dollar index topped in January of 2017. And if you look at the cycles, they usually are like 7 to 9 years. I think the dollar index will continue to drift lower until 2023, 2024. Does that mean you buy other fiat currencies? No, in gold and silver. Where do governments hold their gold? Well, in the US, they hold it at Fort Knox, at West Point, I think in Denver as well. I think they have the Denver Mint. They might hold it there. In the UK, they hold it at the Bank of England. In Germany, they hold it at the Bundesbank. Usually it's at the central banks, sometimes at the treasuries, but mostly the central banks. The Fed can just print, but so they don't default the US Treasury. But the flip side, of course, is the currency loses its value. How long it's going to, it could start happening very quickly. Right now, people still believe there's low inflation, or at least the big investors, Wall Street, City of London economists. We know that that's not true. So when the big investors and people like that start realizing that there is inflation, then things could change. Even though a lot of the regulatory, there's a lot of the regulation forces pension funds and banks to keep buying bonds from governments, and that's helping keep interest rates low. Full name says, try and read this link I tried posting it in comments, but YouTube removes it. Yeah, sometimes people think that I remove it, but no, YouTube sometimes puts it in the spam. And unless I go into the spam in the studio and like check it, and it will go. Unless I do that, it won't appear. Okay, going back to the 1700s old England, hopefully before the 1700s, because the Bank of England was chartered in 1694. So maybe before, maybe we'll go to before that. Oh, about England and bonds. England had actually issued, after the Napoleonic Wars in the early 1800s, the UK had a lot of debt, of course, to fight that war. And they issued what they called perpetuals or consols. So these were bonds that were, the coupon was like 3%, which wasn't bad, 3.5%, because in the 19th century, up until 1914, inflation was zero. Prices didn't rise. So if you got 3% or 3.5%, that was quite good. So what is a perpetual bond? Well, it's a bond that never matures. And the problem about these perpetual bonds, and I don't think they retired it, they've retired them. But if interest rates start rising, their price can drop very sharply. So it's even longer than 100-term bonds because it's perpetual. So that's an interesting point about England. Colonel Crypto, do you think house prices will crash significantly? Where are you talking about, Colonel Crypto? Would that be in the UK or US? In the UK, I think house prices, even though they've gone up in pounds, if you go back to 2007 when the pound was over $2, so back then, if you bought a house for 100,000 pounds, it would be worth $50,000. And now, if the house is doubled to 200,000 in dollars, it's just over 100. In dollars, it's not as much. It didn't go up as much. That's what I'm trying to say. So Colonel Crypto is in the UK. Yeah, I think they're definitely overvalued more towards London. I think, but the way they're keeping it up is because interest rates are so low, so more people can still borrow and keep servicing their mortgage. What you need to keep an eye on is interest rates in the UK. Longer term interest rates, a 10-year gilt yield is still below, it's like 0.6%. But I would say the rise in house prices in the last 10 years in the UK, yes, it's been in pounds, but the pound has gone down a lot, so as well. So in real terms, it hasn't really gone up that much. But yeah, definitely, I think they will eventually correct. They did correct quite a bit in the late 80s until the early 90s. So it has happened before. Lord Humongous thinks there will be a 60% correction. Ibrahim Mahdi Abu Bakr, hope you're well. Thank you. In Egypt, the banks offer 15.5% annually for 3 years. 3 years ago, it was 20%. They put money into account every month. Did it for the past 6 years and no problem. Thoughts? Yeah, I guess in your Egyptian pounds, I guess that's the currency in Egypt. I mean, I remember people telling me the same thing about Turkey, that you could get a lot of interest there. But then a year or two later, the Turkish lira dropped by 50% against the pound or the dollar. So yes, you can be getting that interest, but for people, let's say in the UK or in the US, if they put their money in Egyptian pounds, I haven't looked how the Egyptian pound is done. Let's have a look. Have a look here. I'll do it to the US dollar. So yeah, back in 20, let's have a look. So yeah, for example, in August of 2016, the dollar went from 8.85 to 18.58. So right now, yeah, the Egyptian pound has done well in the last 3 years. So yeah, if you can get 15%, it's pretty good. But beware of the foreign exchange risk. I hope that helps. Maybe the thing to do, Ibrahim, is to keep half in your local currency and get the interest. And if you can, put the other half in a foreign currency like the dollar or in gold. And so you can hedge it. That's what I would do. That's right, Colonel Crypto. Help to Buy scheme is just another way to inflate house prices. Yeah, and it was supposed to help people get into into housing, but it actually has the negative impact. The best thing would be to let the market decide interest rates. If interest rates were normal, house prices would come down because people wouldn't be able to finance them as much. I hear a lot of people saying, "Oh, there's not enough houses. There's too many immigrants." It's none of that. No one talks about the fact that the Bank of England is keeping rates at zero, and that's why people are financing their houses. How they can afford the big mortgage, and also people who have saved, who are older and have a lot of cash in the bank. They're not getting any interest in the bank. So what do? Well, they buy to let, because at least there they get some kind of income, like 4, maybe 5%. All right, I'll take a few more questions and then I'll call it a night. So 2 or 3 more questions. I've got my Time to Retire the Old Lady of Threadneedle Street mug and shut the bank's doors. That's my equivalent of the end of Fed for the Bank of England. So that's the nickname for the Bank of England, the old lady. And in the back, it says, the bank hath the benefit of all interest on all monies which it creates out of nothing. Do you know who said that? It was the founder of the Bank of England, William Patterson. There you go. Thank you, Lord Humongous. Hope you have a good evening as well. Full name? Are you going to put the link in the comment section of this live stream, right? Or if it doesn't come on, I'll go into the spam section. I'll have a look. All right. I'll give you guys a little more time for a question. If not, I'm gonna call it a day right now. Okay. No more questions. Thank you for showing up. Yeah, keep an eye out for more live streams, and I will keep doing the Sunday live stream at 9 p.m. London. Thanks for everyone showing up, and yeah, I'll talk to you later. Take care. Bye.